Welcome to this month's educational seminar on another exciting topic of wealth management, what to do with the tax refund. I'm your host, Roop Singh. I run a wealth management practice at RBC Dominion Securities. In the past few months, we have talked about RRSP and TFSA as tax planning tools. Many Canadians have benefited from our webinars and have contributed to their RRSP and TFSA contribution rooms at a reasonable time frame. Canadians who have filed their taxes, and if they are eligible, they would have received a refund by now or are in the process of receiving soon. Continuing on our previous conversation, we have invited Amandeep Singh, partner at Cloudiverse CPAs, to join us today and shed some light on Canadians' common question: what should a Canadian do with their tax refund? But before we begin, if you have any questions for our presenters, please submit them to us via email at roopmeet.singh@rbc.com. Welcome back, Aman.
Thank you for having me again, Roop.
It's my pleasure. Over the last couple of months, we had many audience reaching out to us after our webinars. They have found your advice very useful. So thank you, Aman, for sharing your time, sharing your advice on these very relevant topics related to wealth planning. So, Aman, today our listeners are expecting to have, or recently received, or they're expecting to have been receiving some income tax refund from the Canada Revenue Agency, CRA, due to their RSP contribution, interest expenses, tax shelter deductions, or various other tax deductions and credits. That led to our today's discussion on strategies that may help our listeners use income tax refund wisely and assist them in meeting their financial goals. So, Aman, can you please advise, when can a taxpayer expect a tax refund, and how much time does it take to get it?
Good question, in a very relevant time because people are getting tax refunds right now. So, see, a tax refund typically arises, when the amount of tax owing on your return is less than the amount of tax withheld from your income during the year. Mm-hmm. So that's a very a simple definition. But Canadians who file returns online might receive the money within 2 weeks. And for those Canadians who file paper forms, they might have to wait around 8 weeks to get the refunds. Now, let me mention that these timelines are only valid for returns that CRA receives on or before the due date, which is April 30, 2021. So, especially this year, I want to remind our listeners that unlike the last year's tax season, there is no extension to the tax filing deadline this year. So 2020 tax returns for most individuals must be filed by April 30, 2021, or late filing penalty may be imposed by CRA.
Okay. So thanks for pointing this out on the personal tax return deadline, Aman. But see, COVID has impacted the financial situations of many taxpayers as well. Do these taxpayers have to also pay the tax by April 30th, 2021?
Yes, they have to pay the tax by April 30, 2021, but for some taxpayers, instead of extending the tax filing deadline like last year, CRA has made some changes to provide relaxation for some people. Now, keep in mind that it is not for all the taxpayers, but only certain selected taxpayers. So what is the relaxation? That CRA has waived off the interest charged on 2020 tax dues until April 30, 2022, and it has also exempted cash benefits like GST refund in Canada, child benefit from tax adjustments for this year. Yeah.
Interestingly, there's a very interesting question came up in an email from one of our listeners. So they're saying they are supposed to file their own taxes. They haven't done it yet. It's too late though. However, they are asking if they should file on their own, or it's very easy way to do it, or should they seek a professional? By the way, these individuals are recently became Canadians.
Oh, that's an interesting question. You see, most people's financial situations change every year. So it's a question which should be actually asked on an annual basis, right? So every year you need to ask this question, whether I should do it myself or I should hire a tax professional like a CPA to do it. See, hiring a CPA might help in uncovering tax savings that even the best tax software might not surface. So let me give you an example. So for example, some people don't know that for their group health insurance, that is their health insurance, the premiums which they pay beyond the portion which the company pays is a valid medical expense which can be claimed on their tax return. And they find this to be pleasantly surprising. Many times I've seen that. So getting a professional to prepare can help in saving time, it can reduce stress, and it can also avoid costly tax errors, Roop.
So, Aman, you have been helping quite a few clients file their taxes over this month, and so how and some clients have received their refunds. So, what's your suggestion or advice to your clients to use these refunds? That's basically the topic of our today's session.
So you've hit the nail right on the head. So see, for the refund, it's always a good experience for the taxpayer when they're getting a refund, and some of them are jubilant and they will tell me that they'll use the refund for a well-deserved vacation or to do renovation of their home.
Yeah.
So, but in a few cases, that is an appropriate use of the money, depending upon their need and the time. But as a conservative accountant, I advise them that they might also consider repaying some debt or saving all, or at least a portion of their refund, right, for their future financial security. You already know that there is a reason why Einstein, the famous scientist, said that the compound interest is the eighth wonder of the world. So, right? So he who understands it earns it, and he who does not understand has to pay it, right? So the compounding effect helps even small savings. As you must have seen with your clients, the compound effect helps even small savings grow significantly over the long term, helping them achieve the financial lifestyle they want. But Arup, since you are an investment advisor, can you please let our listeners know how can a tax refund be used for investment purposes?
Yeah, absolutely. So you did touch upon a few points here. So when we do financial planning for our clients, we do talk about debt reductions and other stuff. Having said that, when it comes to investments, the basic advice is, as soon as you get the RSP, when you're doing the RSP contribution and other reasons why you get the tax refund, use that money to top up the TFSA, right? Or even if there is certain room available in your RSP, do that RSP contribution or do a spousal RSP contribution. Certain clients, what they also tend to do is they allocate money towards their children RESP, and then if let's say these investment vehicles they have already utilized, they can use those funds for non-registered investment opportunities, allocate some extra funds towards emergency fund, for example, like last year when COVID happened and people were either not working throughout the year. So, but again, they need the resources for food, for mortgage, for et cetera, et cetera. So that's where they relied upon having an emergency fund. So topping up the emergency fund would be a few things for sure. We suggest our clients, however, we always ask them to seek advice from their accountant from the tax efficiency perspective. What is the right approach?
Oh, that's a very good answer. Thank you for sharing that with our listeners. Roop, I have another question. How can the client save for their kids' future? Can you talk a little bit about RESP, which is Registered Education Savings Plan, please?
Yeah, absolutely. So see, the clients contribute towards their children or even their grandchildren's RESP to support their education cost. And let's say, for example, the kids have to go to the university. Of course, the university costs are expensive. So if they start saving those money towards their RESP early on, again, as you mentioned about the compounding effect, as having the right investment strategy in place, of course, you can see the RESP account to be growing with the right strategy. One should keep in mind that the first $2,500 of an RESP contribution, it also attracts a federal government grant of $500 to $600, depending on their family income.
Interesting. So that's a pretty good plan to have for the children. Now, Roop, I just noticed that there is a question from the audience. He says, if we have already topped up our RRSP and TFSA contribution rooms, is there another way that we can use the tax refund? So that's the question. Can you answer that, Roop, please?
Yeah, this is one of the very common questions that we get from high net worth or ultra high net worth clients, because they have already topped up their RSPs and TFSAs, and RESP as well is going through. So they use these extra funds that are available to them for some risk management strategies. So few would be, if you do not have a will, maybe consult a lawyer and have a will or update a will, create a power of attorney, so that also costs some dollars or fees for a lawyer. So you can use these funds directly going towards these risk management strategy. Another one could be, make sure that the clients have adequate disability and critical illness insurance as well. They have adequate life insurance too. So these are, I would say, top of my mind, a few risk management strategies that the clients can definitely look for and get an evaluation done. We are more than happy to do an evaluation for them, and then you could use those funds towards these. Yeah, but what happens, Aman, if let's say there has been a situation where the client was expecting a bigger tax refund than they actually got. They were expecting more, but they got less. So what would be your suggestions on those situations?
That actually happens quite a lot sometimes, especially in 2020. For those listeners who received COVID benefits, such as a Canada Emergency Response benefit, they might see a lower tax refund, because when those benefits were given, there was no tax which was deducted. So my simple advice is that the listeners should have realistic expectations about how much money they will receive. And, not pre-spend or make plans to spend in anticipation of the refund. So, see, the listeners can manage their expectations by using online calculators or seeing their tax professionals, like a chartered professional accountant, and develop a realistic sense of what to expect in refund. Now here, this is a very relevant question, I would say. See, a tax refund is not always a good thing.
Okay.
See, contrary to popular opinion, a tax refund is not free money. And waiting or planning towards getting a tax refund is not the best approach investment-wise. Now, our listeners might say, why? Like, because everyone likes a tax refund, right?
Yeah.
So, see, So this is because you have effectively provided the government with an interest-free loan for about 1 year. Money that could have been in your hands, earning returns. So many people with employment income get tax refunds because they get tax deducted right at the source. You know, when they get the paycheck, the tax is already deducted from that. Now, the amount of tax which is withheld by their employer is calculated without considering various deductions which the taxpayers normally claim, such as an RRSP contribution or childcare expenses, which reduce their tax payable. So that's the main idea behind this.
Well, this is an interesting twist that you brought on towards, how you look at taxes and the tax refunds. So, a follow-up question on that. So, based on this point that you mentioned, how can Canadians reduce their tax deducted at the source so that they can have a bigger paycheck regularly on a monthly basis or on a quarterly, whatever the frequency it is, rather than getting a tax refund later on in the year?
So I'm giving free advice here. So yes, I'll give it. So see, for employees, there are two ways in which their taxes at source can be reduced. The first is making sure that the credits their employer uses to calculate the payroll deductions are up to date. You know, when anyone joins a new job, they have to sign a TD1 return, which tells the BC and provincial tax credits. So that's called a TD1 return. So, and the second is to apply annually for a reduction of tax at source. It is called, so the technical term is T1213 form, 1213 form, which can be filed so that the taxes which are deducted from the payroll can be reduced. So this will lead to a bigger paycheck that can be used to build up savings.
Oh, okay. Can you give a few examples for our listeners today, please?
Definitely. Let's say, suppose the taxpayer's personal or family situation has changed since last year. In that case, they may be entitled to claim credits they haven't claimed before, such as pension income tax credits, spouse or common law partner amount, caregiver amount, and disability amount. Now, if the listeners advise their employers of these additional credits through the TD1 form, this may lower their income tax deduction at the source, so they don't have to wait a full year until their tax return is assessed to receive the refund.
Okay. Yeah, okay. Yeah. I just received another question from one of our listeners. So they are talking about the T12, T13 form that we mentioned. So how are the T12, 13 forms can be used, which you mentioned earlier, Aman?
Oh, so that's the technical term. That's the T12, 13. So let me simplify it a little bit for our listeners. So see, if you don't want to wait until after you file your income tax return to receive your tax refund, and you have regular tax deductions, such as RRSP contributions, childcare expenses, and deductible support payments, I strongly suggest that you talk to a chartered professional accountant about making a request on Form T1213 to the CRA to reduce your tax deductions at source. And if the CRA accepts your request, they will authorize your employer to reduce their income tax withheld from your pay during the year. So what will happen by doing that? See, this will increase your net pay. This means that you'll have more funds in your pocket throughout the year. You know, like every month you have more money rather than just getting it in one lump sum at the year end, right? So this will increase your net pay, and this also means that, it is a better situation for you. You can proactively plan on a monthly basis and save those funds, which can compound and multiply and build the wealth of the listeners. Yeah.
Wow. Aman, these are some excellent insights and excellent tips, Aman. Thank you for sharing them with us and spending time with us on a Saturday morning. Thank you for joining us today.
Thank you, Roop, and thank you, everyone.
This brings us to the end of our call. I want to thank all our attendees for taking the time to attend the seminar. If you have any additional questions, please connect with Aman and myself directly. Please reach out to me to learn more about our wealth management services. And thanks all. We will see you in the next seminar on another relevant wealth management topic. Thank you all.